Union Pacific. Now, what did they do? Well, they did crush it on the earnings, but the revenue was just sort of in line. So that wasn't a big game changer. But earnings up 7%, Mark. Productivity is up 6%, Mark. The freight car velocity, that was up 1%, which actually is a bigger number than it sounds. But the fuel, that's where it really counts. That was down 23%. That gives you a much better margin, right? So when you look at some of these numbers that they're putting up, there's a good reason why Union Pacific is sitting there bumping right up against the 52-week highs. That's a stock that's up 5% today. You can see it right there. A really nice jump. Not a name that people are always looking for that kind of a move, but they got that move today. Union Pacific, I like the numbers they were able to put up. And if they can do anything, maybe even buying a little bit of that fuel now while we've got it down there at a lower level might not be a bad idea. They used to do it in the airline industry. Maybe they're going to start doing it again in the rails. We'll see. But right now, Union Pacific is absolutely rolling along.
Yeah, I love the juxtaposition, by the way. We just covered cutting-edge stocks and companies that didn't exist a year or two ago that are doing small modular and nuclear reactors and things like that, to Union Pacific that's been around since when the Union was created, right? It's definitely not a cutting-edge technology stock. And yeah, it's a lot about fuel management. I think a lot of the outlook is based in part on anticipated increased GDP and overall increased productivity from American industry. If we're making more stuff, the more stuff's got to be moved around, and freight rail is still a very significant component of how we move industrial goods in this country. So yeah, and then of course, beating expectations. But you know, what's interesting to me about this story, Pete, and I covered this, a related component of this on my SiriusXM Wharton Business Daily show this morning with the very poor results and outlook from American Airlines. If a company like Alaskan Airlines can actually do a better job of anticipating what their fuel costs are, and Union Pacific, a stodgy old railroad, you would think that American would be able to do a better job of that as well. But of course, flying continues to be a pain in the butt. I was on a 6 a.m. flight this morning to get down here to Miami, Florida.